Hello, greetings. It's good to see you again on YouTube. And right now we are going to continue what we left last time in the previous video. In the previous video we talked about the theory of general journal. General journal is for journalizing transaction or recording transactions in the chronological order. And in this video we are going to be focusing on the practical part, the hand-on exercise. Okay, so accounting is fun. Let's enjoy accounting and let's go ahead and do it. Okay, here in this part of the page you can see the general journal right here, and you can see the chart of account right here and the transactions right here. Okay, so we are going to read the instruction. It says Hans Schultz owns a service business called Yard Care, which uses the following account. Alright, so we have the chart of account. These are the account titles that we're going to be using. Okay, these are the accounts that Mr. Hans Schultz uses when the journal has to be done. Okay, on top of it I have some T accounts. Right, T accounts are very useful for us to analyze transaction. Okay, so without talking too much, let's go ahead and do it. Let's go ahead and do this. Alright, April 1, Hans Schultz invested 2,500 of his own money in the business, receipt number 1. Alright, so after reading this transaction, we can tell that one account involved in this transaction is cash. Alright, cash. I type cash here. And the other account that's involved is definitely the owner's equity is involved, but the account title is Hans Schultz Capital. Alright, capital. Right, so I type the two accounts involved in my T account so I can analyze them. Cash, in this case, we know it is being debited, $2,500, and capital is being credited, $2,500. Okay, $2,500. Okay, good. Now that I know which one is debited, which one is credited, I am ready to journalize. Okay, so before we do anything, before we put the entries in, I want to remind you that the page number is quite important. Right? Page number cannot be forgotten. Alright, so in the first line, the first part of the first entry, we always put the year and also the month. The rest of them, we don't have to repeat this all the time, right? Because we just have to put the day, the numeric day, for the rest of the entry. Now, it is the first transaction of the first day of the month, April 1, and we know cash is being credited. I'm sorry, cash is being debited. The amount is $2,500. Let me try to make it neat. Alright, and here I have the capital account, right? We have the Hans Schultz Capital. Alright, Hans Schultz Capital is being credited. I put the amount, the same amount. Okay, debit to the left, credit to the right. And you can see that debit to the left, credit to the right is not just a repetitive mantra that you repeat all the time. You can see it is being true here on the amount column. Right, amount on the left hand side is debit, on the right hand side is credit, and here on the account title, same thing. Cash in this case is debited, it is all the way on the left hand side, and credit is Hans Schultz Capital. You leave a little space to make sure it is on the right hand side. Okay, so it's very clear. Okay, it's a perfect balance. We see at the end of the transaction we are given the source document. In this case, it's receipt number 1. We're going to go ahead and put R1 receipt number 1. Okay? Wonderful. Let's move on to the second transaction that takes place on the 3rd. On the 3rd of April, use business cash to purchase supply costing $105. And the check is written. It's check number 1. Okay, good. Here we see that use business cash to purchase supply. Okay, so we know that cash is one of the accounts, supply is another one. Supplies for the business. So in this case, cash is being spent, so cash is credited. Remember, when asset decreases, it is said to be credited. Alright? So $105 on the credit side, cash $105 on the supplies $105 on the debit side. Okay, so again, let me remind you, we always start journalizing with the debit account. Okay, in this case it's supply. Right, let me go ahead and put the 3 again. You see that this place is empty. I am not going to put the year and the month again. That's redundant. We want to be simple. Supplies. Okay, $105 right here. Okay. Let me fix this real quick. Well, let me just leave it like that. Okay, cash is being credited. Let me go ahead and put $105. Alright, very good. In this case, check number 1 is our source document, isn't it? Right here. Now, the third transaction is on the 4th of April. On the 4th of April, I put 4. And let me read, wrote check number 2 for insurance, $240. Okay? Wrote check number 2 for insurance. We know that when you give a check to someone, when you write a check to someone, you are spending money. Because when that person takes the check to the bank to cash it out, your money in your checking account is going to be taken out. It's going to be decreased. So we know cash is involved in this transaction. The other account that's involved is definitely prepaid insurance. Prepaid insurance. Okay, very good. Prepaid insurance is right here. Right, we have to make sure we use the account title that is according to the chart of account. We cannot invent our own account title. Right, cash in this case is being credited. Right, when you have to spend money, you have less money, and insurance, which is an asset, is being debited. So we start journalizing the debit account first. Prepaid insurance, and it is C2. We know that it says write check number 2, so it tells you it is the source document, and insurance is being debited $240. Cash is being spent, so that's being credited $240. Okay, so it's very straightforward, it's very simple, there's no complication. I'm gonna stop right here. Okay, so if you want, you can go ahead and do it, like finish it. Okay, draw your own paper, or if you want, you can Google it. You can Google General Journal on the Google image, and download one of those. Do it on pen, or just use Excel to make your own General Journal form. Alright, either way is okay, it's good. So let me just give you the conclusion, right? Just to sum it up. When you journalize, okay, the first thing you have to do is to read the transaction very carefully. Okay, when you read the transaction very carefully, you will be able to tell which two accounts are affected. One has to be debited, the other one has to be credited to maintain the perfect balance. Like this one, purchase supply for $75 over the phone from Midwest Supply, promising to send the check next week, memo 1. Okay, so basically this guy, Mr. Hans Schultz, he phoned the company to order the supply. Okay, to order the supply, and the supply is worth $75. Okay, so supply is involved, but he's not making payment right now. He's not paying cash. He promised to pay next week. That means that the liability builds up. Okay, liability is account payable, Midwest Supply. Alright, so now that you know the two accounts, okay, the next thing you're gonna do is to determine which one is debited, which one is credited. We know that both of them increased. Okay, supply increased, but supply is an asset, so it's debited. Liability increased, liability is on the credit side, it is credited. Okay, so supply debited, liability credited, and now you know that you have to journalize supply first, and then account payable. Alright, and then your source document is right here, memorandum number 1, so it's M1. Alright, so just feel free to contact me if you have any question. Leave comments, email me if you want to, and yeah, I'll be happy to reply, and I'll be happy to help. So cheers, have fun, and be blessed. Bye.